Gentlemen in the mix.
Welcome aboard, traders, to a new session of charting across the board. Today is March 19th of 2025. By the way, today is the 3-day allowance or the max day for the allowance time of the intersection between price and time for previously expected for March the 16th. And as of now, we are experiencing some indeed turning point in the price action besides reaching the 76,000 region. We do know that nothing goes straight down. However, we are constantly monitoring new developments in the price action, such as the previously expected or projected also the major M formation for a Cypher and Shark. Cypher currently in as of now the 0.786 or the 76,000 region, tested, now rebounding. However, today we are having some intersection, some development, turning point in the price action, whether or not this is a reflexive rally or are the bulls back in town will be determined when more data are constructed. Okay. So far, what we can observe in the price action is daily time frame. We're going to be moving into different time intervals. The first one was the previously once again projected M formation, a variation of an M formation since the highs at 106, 104. That was the expectation to go at least towards the 0.786 at 76,000 region. Yes, we could expect lower levels, but you guys know we're moving into levels by levels. As of now, the expectation of lower levels did not reach yet, but we are testing the previous support at 76,000 region or the previous expectation. Okay. Within this range, there are other variables also that we're tracking within the room, such as the M formation within the variation or another interpretation of the distribution schematic. Go very briefly into those charts only to demonstrate what those levels are. This is what we were expecting within the room. Once again, this is a chart for the S&P 500. We're also going to touch those levels today briefly prior to ending the stream, as today we have the FOMC meeting. Expectations, everybody's worrying about the economy. Here, all we do care is about the technicals. And of course, some of them may differ. However, what we do here is from a technical approach. Expectation on Bitcoin from the highs at 106, 104, we were looking for that decline until when? Until March 16th, right? However, today is March 19th, prior to another turning point, at least within the short-term trend for an intermediate cycle low. Has been the case for now, at least. Does this mean we are going to go higher, new all-time high from these levels? First and foremost, we were not calling for 130, 120 at those highs. We were approaching objectively and looking for lower levels from the 106, 104 towards those levels. I want to make clear that we are not approaching here. We're not changing our tone every time the price action goes lower or higher. We stick to our projections, and therefore here we are, okay? Pending information on BTC, only to showcase the levels for those who are new or are watching this later. It's important for me to give a context as to where we are, where we were previously also, and where we are, and where can we potentially be heading to, okay? Therefore, that level was tested at the 0.786. Okay. There are other levels below, but again, we mentioned that we're going to be moving accordingly as more data continues to develop. 75,000 was in the cards. However, 76 did not break below it. Therefore, we were looking at potential support levels that only yesterday there was an information on the hourly time frame, bullish hourly time frame, that is giving us this potential rebound. How high? We're going to be diving into those levels. Levels of confluence for this information was a shark pattern. Okay, shark pattern. We have indeed tested those levels of support at 76,000 region. From here on, we have other levels of confluence. Okay, this one was the first one. The second one, the intersection between time and price, since January. Okay, March 16th, within the higher range, we're not calling once again 120 or 130. Okay, or higher levels. We're looking lower. Okay, and now we are intersecting between price and time for March 19th. Once again, we are within the 3-day time allowance for a turning point. That so far seems to be the case. The next confluence, this is also another major information, okay? And potentially a key level where we are bouncing from at the B point in this case, at the 106 was the projection to go lower, okay? Once again, we're not expecting higher levels, but rather a potential decline that can serve as the B point now, where we are now potentially defending the 76,000 region and bouncing to where? Is it 93,000 region within the cards? Absolutely, yes, that can be the case. You guys can observe this was all previously projected since January the 21st, okay? The decline, potential bounce at the B point, we were not looking the exact price level, but we're gauging potential support levels within the 76, 74, all the way to the 70, right? Before breaking any lower. Why? Because we do have lower levels, as you guys can observe in this segment of the move. However, you guys know that nothing goes straight down, but moving accordingly into price segments. Potential bounce is what we're experiencing now on Bitcoin. From the B point, and we be heading towards a C, the BC, prior to another decline. Is this a reflexive rally or a true reversal point? First and foremost, what is a reflexive rally? As you guys can observe, a reflexive rally is a sharp decline, a short-term rebound, I would say, in price that occurs after a strong decline. BTC experienced nearly 30% decline from the highs. That is often driven mainly by oversold conditions, therefore it's more technical than fundamental, right? Before another extreme bearish is positioning to lower levels. So therefore, reflexive rally, or are the bulls back in town? In my opinion, we are still within a downtrend until, of course, new data set dictates otherwise. By this, I mean a shift in sequence of these lower highs that has been previously presented and projected also, and now is manifesting in the price action with lower lows and lower highs. No shift in sequence yet. However, it's important to know that we are potentially constructing a momentum shifting structure, which is a falling wedge. As you can observe here, if we connect the most significant touching points within the trend line, you can observe that this is potentially the case, okay? On the upper trend line for supply zone or support levels also at the lower trend line. Can we touch the supply zone at 91,000 region? That can potentially be the case. Therefore, let's go into where we are currently in the price action. However, keep in mind that we are potentially experiencing also the rebound or the rebounds from the previously projected decline. Okay, this is a very important chart, my friends. The highs at 109 to the lows, okay, within the 76, 74, even to 70. Where do we find support? 76 and potentially now heading into the C, in my opinion. Okay. By the way, none of these represent any financial advice, but rather an interpretation of the technical information. Therefore, if that's the case, we then can potentially experience another decline to the CD and the final support, in my opinion, the previous structure resistance that can potentially be acting as support up until June. Once again, we never, or not never, but we don't often change our tone when the price action is printing new levels. We rather make a projection, the levels are met, and therefore we move accordingly when these variables meet the criteria that we were looking for. Okay. So therefore, current market information, let's go into the current levels. Okay. Because this level of the move correspond to that previous projection, which is this one. Okay. This is a support. Once again, to keep the context in mind, this is a projection, and now the manifestation of that projection. Okay. Therefore, are we now within this B to the C? And potentially from there on, another lows. We will see, my friends, why. Because if we look into the smaller time frames, let's jump now into the hourly time frame. Because here we are experiencing a support level at the PRC of a bullish Garley pattern so far, manifesting with an upward traction of nearly, I would say 3%, 4%, 4.57%. How high can we go? We start computing all the harmonic ratios once again within this segment of the move. Is ideally within the B point. Okay, this is a B point. We cannot see that small information, right? If we zoom into the hourly, this is very minuscule. However, keep in mind that this is the B point right here, right? It might be somewhere here. If the B point is already in, okay, I did not change any data point here. However, the B point may be in already here, okay? Now, can we go to the C leg? If that's the case, the confluence we do have now is another pending W formation, at least within the short-term trend. Connecting all the previous high or the lower highs within this segment of the move, we have another pending W formation that can indeed reach the PRC, the potential reversal zone, at 89,400, or a Garley or Pesavento Garley, the Pesavento ratio of the 0.786, bearish Garley pending as of now, as well as the 0.886 for a bearish BAP pattern based on the research of Scott Carney. That will be the completion point at 90,000 region for Bitcoin. Okay, so therefore, if we now zoom into the 4-hour time frame, what do we have at those levels, or the daily even? Okay, we go back into a daily time frame. That can be indeed the supply zone of the upper boundary of the falling wedge, momentum shifting structure. That can be still the case prior to potentially head lower later on. But once again, keep in mind that we're moving accordingly. And to understand that we are having the FOMC meeting to us, those events are only important within that specific date, meaning today. Other than that, everything else has manifested so far. Okay, so the argument, the criteria has been tested. Therefore, if we go to 86 or 91, would not be because of what Jerome Powell says. It will only be based on the technical condition that has already manifested and printed so far. Okay, therefore, projection from the lows now potentially on the hourly time frame, that can be the case. In my opinion, that can be the case only if we're not breaking any lower than 81. Previously, I presented a C leg here, here in this one, right here. However, after the Garley, the symmetry now prints a very symmetrical formation that can be an M leading to a W. Okay, so this is what is within my radar now before calling for higher levels, right? Or the return of the bulls. This indeed coincides now with the potential reflexive rally. Okay. Oftentimes, these reflexive rallies can trap late sellers and may eventually fade if broader trends remain bearish, right? We have indeed a decline. The Wyckoff distribution schematic presented at the highs, still in a decline until, of course, a shift in sequence dictates otherwise. ROP6, where is that shift in sequence you're talking? Well, if we look at the previous lower high, the most recent one here at 95,000 region, breaking above would imply ideally a shift in sequence of lower highs, potentially if there is a new trend in development. Until then, another reflexive rally or another high can be interpreted only as a reflexive rally. I believe we were speaking about reflexive rallies on the S&P, okay? So these are the levels I'm looking on BTC. Now to culminate the stream, very briefly, let's jump into, once again, the S&P 500, okay? Were we looking at these levels also before on the S&P 500? You guys know, all we do here is we project or make projections in advance, okay? We make a projection, those levels are reached, and then we move accordingly when more data sets are printed. Now, moving to S&P 500, you guys can observe we have previously a W formation, type 1, type 2 return. Type 2 returns are the price phenomenon that creates that true reversal point. Not necessarily the type 1, which is the first reactive move of the W formation, in this case, a very structure, creating that first turning point, another retest as a secondary test of the highs, also known as a double top, correct? Before making that true turning point. That has been the case. So therefore, we are here now. This one was the expectation also on the S&P 500, okay? Because remember, we are projecting prior to the event occurs, okay? We're not making projections to call higher levels, and then when the price goes lower, we continue to adjust over and over or make different projections. Right? We move accordingly to what we previously projected. Those levels are reached, and then how high can the S&P 500 go from here? We have a projection from the highs, 61.28, 61.62, a decline within the 56 to 5,500 region that was regarded indeed as support. Projection made when January 31st of 2025, early this year. Now, after the decline, we're observing the bounce, right? Please note here that we have a time axis for March 26. This will be the turning point also on the potential cycle low on the S&P 500, okay? We're observing the first reactive move after also reaching those lows. We go back in time. It's very important to bring that chart in mind. This is where we are. Projection made January 31st. Projection manifested. Okay. Once again, we're not calling for higher levels at these highs, my friends, right? We're rather approaching the markets objectively. A decline of 10%. Now panic. The panic has hit the street. 10%. This can be indeed a correction, okay? That can be indeed a correction. However, we are expecting at least a test of the 5,800, 59 even, that was initially within the projection. That can still be the case on the S&P 500 prior to another decline, okay? It's very important to differentiate who you listen to and constantly changing their approach. Okay, I'm not talking about anyone in particular, but the industry is filled with charlatans in the space. Everyone, thank you for being here. Let's see what the chairman bring us for today. Was this already presented in the chart previously and now coming as a catalyst? We will see, my friends. Let the chart speak themselves. Show me the charts and I'll tell you the news. Everyone, I'll see you guys on the next one. And remember, we potentially could be experiencing what is known as reflexive rallies. We talked about this before, prior to a decline, as to how high can we go, and now the prices are manifesting. Okay, to finalize the stream, once again, projection being made previously January 31st at the highs to reach the target, the objective 56,500 region, now bouncing from those levels. I want to make a comment also that trying to trade the exact low or high is always a different case, right? The execution can be extremely difficult when you have slippage in the price action when looking at minor time frames. However, we're now looking for a potential rebound, 58, 5900 region prior to another decline. If this is indeed a shift within market structure of the previous lower or higher lows, okay, higher lows prior to the lower low that we are observing currently. Previous higher low was a 5800 region, previous support now can be regarded as resistance. We will see, my friends. Nothing is certain in this business as we deal with probabilities. Everyone, thank you for being here. I'll see you guys on the next one. And remember to live a life with an attitude of gratitude. Cheers.